Good afternoon, everybody. Hey, what's happening? We are here today because for the last 15 years of my life, I've been working with a lot of people as an engineer, as a coach, a developer, trader, and moving in pursuit of understanding how markets work. And I feel like we have a pretty novel, unique approach when it comes to trading and looking for statistically relevant opportunities in the market. And so we sort of have become this really unique niche where we're the only company that's time-based, that gives future times before our webinar each week out in advance and sort of dares you to follow along and come back together 2 days later to see what the heck happened. And we've done this now for almost 15 years. Every Thursday at 4 o'clock, we gather together to review whether or not the times that we've published for everyone in the world to see, no updated times, no changed times, no disappearing, reappearing times. And after 15 years, we're still in business. We have a near perfect score with our customers. And we've gotten really good at not only developing tools like this, but learning how to teach them to people so that you can go and be successful on your own. I won't be in the PowerPoint very long today. We have a lot of ground to cover. But one of the reasons why you've never heard of this or other companies don't work with this or it's not as popular of a technique as it might have been is because you have to look at a lot of data to find the patterns inside of it. The program, the indicator that we're reviewing here today, the one that generated the times that you've been following, is searching for marbles in a tornado. Very specific things in a chaotic, messy cluster of opening and closing price bars in virtually every market that you can analyze. And when we parse that data and find the patterns inside of the chaos, some really interesting things start to happen in the markets that you trade. And we're basically going to follow through that process where once a week on Tuesday we publish the histograms for markets like oil and gold and the ES, the DAX, the pound dollar, Ethereum, Bitcoin, different markets to give you a sense of whether or not the software rather is able to find times 2 days later that actually produced movements that are relevant. So we're going to kind of back away slowly from the PowerPoint and talk a little bit about what that means and what's involved with that. This is a screenshot of the TachEon Warp program. Most of what I work with and the names that I come up with, that's one of my responsibilities here. I try to use names that are sort of sci-fi based. I'm a nerd, and I was a nerd before being a nerd was cool. So I kind of feel very, there's a duality in that because for half my life I was beaten up because of it. And then the second half of my life, I've been celebrated for it. And the programs, we sort of rebranded everything a few years ago. I think this is kind of fun to know as we get into the charts, and we'll look at how the signals work this week. But TachEon is sort of a play on two words, a TachEon and Eon. A tachyon is a theoretical particle that can move forwards and backwards in time. And an eon, of course, is an endless age or infinite time. And so the program that we're looking at, TachEon Warp, is sort of a play on that Star Trek engage warp speed type principle. This idea that we're moving through tons and tons and tons of data to find times where the market is likely to move in the future. And one of the ways that we can accomplish that is through a process known as data mining. There's a lot of reports in the news lately, different quote unquote artificially intelligent programs that have essentially been trained on large amounts of data on the web and in various places, programs like ChatGPT. Warp is not an AI program in that nouveau sense, but it does behave in a similar fashion where we're asking it to look for patterns and then make a projection or a guess about what it is our customers want to see. So for example, today is a Thursday. It's May 18th. And if you look at the indicator in the program parameter, there are going to be two numbers that are relevant for this explanation. One is a 7, the other is a 14. If you're watching from home as a customer, we're using a 714 with a swing strength of 8, 678 for our calculations. And what the program is essentially doing is it's been asked to go back 7 and 14 days historically. And over the last 2 Thursdays, yes, only 2 Thursdays, the program is looking in the full Globex session at all the times that the E-mini S&P has gone up and gone down. So across thousands of historical bars, the software is asking the question, are there any times on a Thursday where the market is consistently going up or consistently going down? Now, at face value, this seems like a ridiculous question. Everyone knows that markets are random. Everyone knows that markets are reacting to things like news and rumors and what color tie the federal chairman of the reserve chairman is wearing, and was he smiling that day? Did he have a bagel with cream cheese or butter? Those are the things that move markets, right? We don't believe that to be the case. We assume something that no other or most vendors don't assume, and our primary belief is that markets are rigged. And there's ample evidence to support it. We don't have to Google very far to see that companies like JP Morgan, the largest institutional lender and investor in the world for over a century, gets caught every year, most recently manipulating precious metal futures, spoofing, and other illegal techniques. So that's sort of our primary belief, that markets are rigged. And to support that, we go back into the data and we look to see, are there any times where the riggers are consistently pushing prices higher or lower? Now, fun fact, when you do that, The signals for next Thursday, or today, are available as soon as last Thursday is finished. Let me state that again. The minute the clock strikes midnight on Thursday of last week, all of the data, Chris, is available for this Thursday, which means that the signals we're about to review are how old? So Chris, I'll answer your question. You answer mine first. If we have the patterns at the close of the market last Thursday, meaning we get all this data, the computer comes and it spits out all of the buying times and all of the selling times. How old are the signals on my chart right now? How long have we been waiting to see if they'll actually play out? It's a pretty easy question. Anybody have a guess? If the calculations for today are based on what happened last week and the week before, they're 1 week old. Yeah, exactly. So Chris says, how come it's not 3 or 4 or 5 or 6 more weeks? Interestingly enough, the more weeks you add back, the less accurate this gets. So let's call this accuracy, Chris, and we'll call this number of weeks of data. And what starts to happen is it starts to do this pretty quick. Some patterns are growing and they're becoming more and more prevalent. And then, Chris, some patterns are devolving. They're becoming less and less relevant. And if you have more and more weeks in your calculation, believe it or not, the days back here have patterns that are no longer relevant up here. At least that's been our experience over the past decade plus. When we first started, Chris, the primary value wasn't 2, it was 6. And it worked really well for about 3 or 4 weeks. And then I had a hellacious webinar, and then an even worse webinar, and then a webinar where I left in tears and I said, I don't understand, nothing's working. And Chris, we realized that was too many days of look back. And so we reverted back to the original, and it's been great ever since. Does that make sense? I don't want to gloss over that question. It's actually a really good one. I would have thought the same thing you thought when we first started. In fact, I did. Okay. So now when we come in here today, we're looking at the signals themselves. And let me come in here. I gotta move some things around on my screen. I got GoToWebinar stuff everywhere today. Apologies. I hope you're doing well, by the way. Let's pull this up. Nope, that's not the one I wanted. I wanted the other one. This one, yes. 8:30, that's the one. So earlier in the week, everyone always asks, when I meet with people, Chris, one of the first questions I'll always get asked is, does this work on the E-mini S&P? It's sort of the market everyone's really curious about because most of you are trading it. And when we published the histogram times for Thursday, and those times were available for review on Tuesday, this is what the computer came back with. Hey, Robert, good to see you. And essentially, all of the times that are above the 0 line were times that the computer had found as of last Thursday that the preceding 2 weeks had historical anomalies, meaning there were moves that were occurring and pressing to the downside over and over again. You might want to use the word behavior patterns. So let's actually write that, behavior patterns. And these behavior patterns on the upside were historically selling signals. There are times that the ES had sort of reached a pinnacle and started to fall. That's what was happening at these times. Often enough, that the algorithm, without emotion, without any kind of parsing or discretion, said these are happening often enough for me to warn you about it next Thursday. Now, vice versa, these signals here are times over the last 2 Thursdays where this has sort of happened, a buying event, a pivot, a reversal, and 510, 805, 1030, 1215, 155, 320, and so on. These are the times that the indicator wanted us to be aware of a behavior pattern. And you'll notice in my timing signals that they alternate in polarity, right? So Robert, we discussed this. They're kind of going up and down and up and down and up and down. It shoots from positive to negative, and that's how it works in nature. That's how it works in time. There's a polarity reversal on every signal. Okay, so these were the times that we were waiting for or watching for a possible repetition of a behavior pattern. Now, as you can imagine, this is a pretty important moment for me as a developer, as an educator, as a business owner. You never want to show up and have to explain why all the signals didn't work. So when we overlay those times on top of the market today, there's some really cool things that took place on the 5-minute chart, especially. Whew. Slow down, breathe. Remember, everyone at the webinar doesn't talk or think as quickly as you do. So this morning, we had an unemployment claim report. This is a pretty big one. And we had the Philly Fed manufacturing index. And you can see here, minus 10, minus 19, 242, 253, big differences in the numbers. So, Robert, this was a pretty big market mover, and the guys at Forex Factory want us to know we probably shouldn't trade anywhere near this time because it is historically relatively volatile, right? So, sort of like a rattlesnake shaking its tail noise here. Be careful. Don't trade in and around this time today. And then at 10 o'clock, we had existing home sales, which is another pretty big benchmark that people are watching for these movements to occur. Billy writes, would a trader be taking these times from the indicator literally and place a trade in the direction it's suggesting? Or does one have to add other indicators to make a decision? Billy, good question. Thank you for that. And I'm going to show you a pre-canned solution that was described with the times we supplied. And we'll sort of break that into 2 different categories. Of the customers that are using the software successfully, sort of an anecdotal survey, we found out about 60% of the customers are trading with the trend. Which, Billy, sort of excludes about half the signals, right? And then 20% of the other customers, the crazy people, they are top and bottom hunters. The technical term would be a mean reversion trader. They believe the market is too far away from the average pricing, and they're looking for things like double tops, double bottoms, divergence, volume spikes, candle patterns, evening star, morning star, doji patterns, things like that. Does that make sense? And this excludes about half of the times and signals. And then the other 20% is sort of a miscellaneous. And Billy, these are usually people who have an existing system and they want to either have smaller stops, larger profit targets, and or less trades. So they're using this for sort of confirmation. You with me so far? And this could be things like Elliott wave analysis, order flow analysis. Robert, you're using the next gen program, support and resistance. It can be volume spread analysis, candle patterns, trend line rejections, trend line breakouts, all sorts of different signals. So Billy, when I teach the program, I tend to show people the first one if they don't have an existing system, because about 2/3 of the people that are using the program follow or adopt a strategy that aligns with this. And it sort of falls in line with what we're taught day one, right? The trend is your what? The trend is your what? Hint. Friend, right? We all know it. It's like if we were going to get tattoos tomorrow, that's what it would be. So here's that 8:30 report. Now, Billy, check it out. I have a system that I teach. Let's go back to the signals. And you'll see on this page, we will be using this manual to interpret the signal patterns. We'll also be showing how the signals can be traded by using one of two simple entry rules called signal with trend or the puncture trade. And there's a video link there that kind of describes it. A max 1.5 average true range volatility stop will be used in the setup for the Thursday demonstration. So Billy, good question. What I'm going to show you here and demonstrate in a second involves two following things. When the 120 period moving average is falling, we're looking for selling signals. When it's rising, we're looking for buying signals. So in the case of my very basic example, I use a 120 EMA. But Bill, some people use an 89. I've started to use a 20 personally. Some people use a 50. It really doesn't matter. You just have to be consistent. You can't use one day and one the other day, right? Otherwise, the statistics sort of fall apart. So when we get to a selling pressure signal, let's use blue in this case, and that candle closes, the program automatically draws a stop level. And that stop level is 1.5 average true range values away. So if an average bar on a 5-minute chart is $4 high, then the stop is going to be $6 away from the high of that candle. If the ATR of a 5-minute candle is $10, super volatile, right? The stop will be $15 away from the high. Yeah. And what that does is, as the market slows down, Billy, the risk gets smaller and smaller, but your profit targets are going to be smaller. And as the market speeds up, your risk is higher, and consequentially, the opportunity for reward gets higher. Yeah. And so the program will work on minute bars, it'll work on tick bars, it'll work on range bars. It's not exclusive to minute bars. We just show minute bars in the webinar because it's easier. A lot of people, everyone knows how a minute bar works. And what we'll do, Bill, is we'll sell this thing until the close of the next candle, the next buying pressure signal. This isn't Minecraft, Michael. Use a round circle. There we go. So, Billy, from the close of this candle to the close of this candle is now my target. So we'll put target right here. So here's our entry, our entry, and our stop is one tick above that line. Now there's a variation of this, guys, called the crossover. So Bill, let's say the white dot starts out over here and the market starts to go higher and higher and higher. Bill, if the candle crosses over the moving average and closes above it, we're now technically in the direction of the trend with a buying signal down here. So what we do with the crossover signal is this. We say, hey, now we're in the direction of the trend. We're going to enter. And our stop, though, will be a little more judicious. We're going to put it 1 to 2 ticks underneath the low of the crossover candle, high if it goes in the other direction. So we'll put our line right there. And now this is our stop. Our exit is going to be the close of the next selling pressure signal. So Bill, hopefully we get in a nice trend trade where it starts to close and go over. And let's say the candle closes right here. It's a down candle. That's going to be our exit. Everybody with me so far? Pretty rudimentary rules. And this isn't the only way to trade it. It's just a very simple way to constrain the raw signals with a rule set, right? Now here's the third setup. It's called a puncture. And this one blows a few of your brains, but that's okay. We're learning new things together here. Bill, when we get to a counter trend trade, it's a selling pressure signal. It's supposed to do what? It's supposed to stop. Whoops. It's supposed to stop here and go down, right? That's what it's done historically. Well, what if it doesn't do that? What if it creeps a little bit and then, Billy, it starts to continue higher? What does that say about the behavior pattern this week? What does that tell us about the behavior pattern this week? They're not following through. They're not there. The people who have been responsible for this behavior pattern have left the building, like Elvis. How many of you know that expression? Elvis has left the building. Where's JP Morgan and Old Sellers? Cricket, cricket, cricket. To me, this means, remember Frasier? I saw every one of those. Every one of those. I thought the dog was the star. Oh, Joe Frazier. I was thinking of the TV sitcom. My head's all over the place. But here's the thing. I'm going to enter, Billy, at a breakout of that ATR stop because we're not supposed to be up here. And so I'm plus 1 tick above that stop line. My stop is going to be below the puncture candle. Now, if we close and this candle opens and starts going up right away, I'll put my stop below the candle that formed before it if there's no candle to reference while this one's forming. But usually it's far enough away where you can get a good idea where the stop is. That's where your stop. And now, Bill, you enter at the breakout and you exit by the next time. So these are the 3 things that we're going to apply to these shenanigans right here. So right off the bat, Billy, at 8:30, the candle's above the moving average. It closes below the moving average. The candle closes right here at 41.73.25. That's our entry. Where's our stop? One tick above the crossover candle. Okay, now the question is, did it move in our direction? Okay, it went down, it went down, it went down, it went down, it went down. It went a total of $11.25. So Billy, I should exit by the next white time. But those of you that come every week, when is my break-even point on these signals that I show you? When do I tell you I will count the trade as a break-even? Somebody remember, so I don't say it out loud and it sounds like I just made it up. When do we go to break-even plus one? As a general rule when we're demonstrating this stuff. That's right, $500. So Billy, in this case, it went over $500 in my direction. So I would have moved my stop to break even plus one tick. So you were up over $600, I think. And then I'd have gotten taken out right here. Right there. Over here. So here's the first question. Did the market go in the direction we were expecting it to 2 days after I published the Times? Yeah, it kind of did, didn't it? With a report that, Billy, no one was supposed to know. Who could have known on Tuesday what the unemployment report would have been and or how the market would have reacted? So those two things right there are pretty compelling evidence for me. Good news, I get to stay in business. Okay, 10:30. The software told us to look for a move up from 10:30 to 11:10 on the biggest index we can track, the S&P E-mini. So Billy, here we go. Just like our example, we enter on the close of the candle. We hold it until the close of the opposite signal at 11:10. It actually goes $10 in our favor. We would have gone break even, but then we close right as that 11:10 signal closes. Now, what was the program warning us about 2 days ago for 11:10? That's right. There's a selling pressure behavior pattern. So 8:30 worked, 10:30 worked. Did 11:10 do what was expected 2 days later? Huh. Now, Bill, here's the thing. I can't trade it because it's not below the moving average. I can't touch it. Even if we saw this double top right here, this double top stop run, that's falling under the category now, Billy, of number 2. I'm not hunting for tops and bottoms. In this case, I'm trading with the trend and using it as an exit. Okay. But for the purposes of impressing you, it did go down from 11:10 until 12:15. So now we're in lunchtime territory, right? So 1, 2, 3 so far. Now we get this little nerd signal. It closes at 41.79.5. It is above the trend line, Bill. I'm going to stop referencing you. There are other people here. We enter and we exit by 12:55. Not a very big trade. $1.50 to the positive. Here we come. It goes and it ticks us in. Bill, there's our crossover. And we enter one tick above that blue line. Ding! Where's our stop? One tick below this candle. Womp womp. You know what happens in trading sometimes? You get stopped out. we lose $3. If we take the crossover from 12.55, Bill, it closes below the moving average. Our stop is one tick above that candle. Let's draw it. Be consistent. And now we have until the close of the 155 candle. Now hold on. We're going to Disney World. It made it a whole 4 ticks with the crossover, which was right here. So if you're keeping track, one short, one long, another long, a breakout that doesn't go very far, probably goes about $3, and then a reversal down. Now, Billy, here's where it gets interesting. Robert, here's where we get into some pretty cool stuff. We never know when the trend is going to start and go. We don't, right? We're not Nostradamus. We're not Punxsutawney Phil. We're not my wife, who seems to think she knows everything. Please don't tell her I said that. But here we go. At 155, we're below. And Billy, we're watching for punctures of this line. Pretty simple, right? That's our do or die moment. It never gets there. Yes, Billy, that's what I just said. It went up into that line, it crossed over and petered out and came back and hit its stop, minus $3. Then it closed below the moving average for a whopping 10 minutes, and then we took $1 back. So now it's not touching the line, it's not puncturing, but Bill, right here, what is this one? That's a crossover trade. It finally joins the ranks of buyers who are looking to go higher. It closes above the moving average, and it even matches the really cool signal that I drew by hand a minute ago. We enter at the close of the candle. Our stop is 1 to 2 ticks below the low. And now how long are we going to hold it? Until the close of the sell signal. Let's see what that did. Enter, exit, plus $5. So Billy, I'm going to put another white arrow under a couple of these signals because it stopped going down and started going up at 12:15. 12:55, it was on its way, but man, I don't really want to count that one. It's ugly. And then Billy, at 1:55, it starts shooting up, right? Now, is there indicator to show the different signals? Yeah, Ruben, it's called Aurora. It's called Aurora, where it automatically plots that stuff on the chart. It shows you red arrows and green arrows, get in, get out. Surprisingly, Ruben, it's not hard after a couple of days to remember where those entries and exits are. And I don't think you'd need it. But if it was available, Dave could help you get your hands on it. Yeah. Yeah. So now, when we're following these signals, there's a couple charts that if you're a customer, I think you should sort of have printed out on your wall. Let me get it for you here. It's sort of how we expect times to, and it won't make any difference to how we take the trades. I just want to show you what I sort of expect to have happen around these times. And if you're using it like Robert with an existing system, Robert, this would be somewhere you would see a block of range bars forming, for example. Let me get a screen capture app running so I can get you copies of this if you don't already have it. Oh, come on. There we go. Really? Here we go. Capture. So when we're in an uptrend, this is usually what happens. Yeah, Billy, we'll make sure David gets you a copy of that. He's pretty great about following up with that. We're almost done. We're in the last 15, 20 minutes here. So let me paste that link to the entire audience. Did you guys get that? When we're in an uptrend, what I expect to happen is that at one point we're going to get to a selling pressure signal like this guy right here. And Billy, you see how the market doesn't go down? Yeah, we sure do. But Billy, you see how it starts to go sideways for a while? Robert, this is when they're taking profit in an uptrend. This is called a reaccumulation phase. And I note this, I want you to see it, because you can literally see the structure of this 150-year-old diagram lining up with what actually took place on our chart. Can you guys sort of see what's going on there? When you get to a selling pressure signal, and Billy, it starts to go sideways like that, I look at this chart and I reference it. And I go, oh boy, they're building up that pressure. It's going even higher. So when you get to a selling pressure signal in an uptrend like that, after a leg up, it's this. It's a throwback, a markup, and then a reaccumulation phase. There's going to be even higher prices. This is how markets have worked for over a century. I would have exited it. Billy, we're going signal by signal. Some of you knuckleheads hold on and you hold it, which is cool too. But I wanted you to reference that. And if you are a customer and you want a copy of this, this is how it works in a downtrend too. Let me get you a copy of that too. This helps me a lot when I'm watching the signals and I see that consolidation. I sort of know, here we go. So at 245, it gets sold. The move stops going up and it goes sideways. Wrong color. And it's being held. You see, Bill, how it's not being allowed to go up any higher right there? When I see that, I count it as the time did exactly what was expected. We started here and we were suppressing the rise. Now, what do we do at 1520? We go long. Did we make a lot of money? No. 3/4 of a point. Now here's a puncture that goes right into a signal with trend. So at 340, the next candle opens up, and then Billy, sitting above this line is a buy stop. And now I'm in until the candle closes, which is a $1.75 move. And then at 345, at the close of the candle, it goes up even more. They started at the beginning, not the end, and I exit by 4 o'clock. That's the trade you guys saw me with when you logged in this morning or afternoon, depending on where you are. So we can say that the 320 signal did what was expected. The 345 signal did what it was expected. And even here, Billy, after the market closed, right? Another one of those consolidation zones. It stops it. And now what's it doing at 4:30? Whoop. I would never enter short at 245 because the trend was up. But if you did, you'd put your stop above that blue line. Remember, we said if you trade with the trend, you exclude half the signals. Yeah, your trend is your buddy. It's the friend that goes, man, Vegas is awesome. We should probably not get drunk and go to the strip club. That's the trend. The counter trend is the guy going, who's going to know? And then he sends screenshots of you on a stage with somebody named Tiffany to your wife. That's the counter trend friend that you don't want to make friends with. So I sort of have a question here, and we're going to look really quickly at a bunch of other markets just to sort of summarize. But Billy, the experiment, remember when we started, and this is the market you guys ask me about all the time, the experiment when we started was, does this stuff work? Right? When we come together 2 days later, did it work or not work? And so far it looks like, can I say that about 60% or more of the signals, when we waited for them, did what we expected to happen at that time? Am I within the realms of sanity? Yeah, I don't like to be the 90% guy. Most webinar people who promise you 80, 90%, it's a curve fit system that doesn't work for more than a week or two. They're curve fitting to current market conditions, and then you end up buying something that's a piece of garbage. So it's pretty cool that 2 days before we got to this webinar, the times that were published, oh, where is it? It's here somewhere. Yeah, the times that were published for about 40,000 people have access to it. When we got here and we looked at what happened, that's what took place 2 days later in the big one. So we have all these other guys, and I wanted to bring your attention to this guy right here. How many of you were in last week's webinar? This is a daily chart. I wanted to show you this. In last week's webinar, which we recorded, Billy, I want you to see something in the upper left-hand corner. I'm going to try to take a screenshot of it and blow it up. We had a prediction on the daily chart, just like we did on the 5 minutes. So one of the big questions we always get asked is, which time frame does it work better on? It works fine on all of them. It's the time frame you're comfortable trading. All the other vendors are like, you have to use this software on a 3-range chart with a 55-17 Renko and a 35 whatchamajigger. I don't even know what I'm saying out loud. They have to very specifically tell you what size time frame to use. This system developed by me and my forefathers who roamed the hinterlands is optimized for a 3.297-minute chart in the Virgo constellation. Last week, the signal that we were waiting for on the daily chart in the webinar on YouTube, which I totally used the wrong color because that's what I do. Billy, can you see how it was warning us about an impending up move on May 15th? This was last week. This is a week from now, a week from today, backwards. Well, I just want you to see, there it is. And the webinar before that, we had told you to look for a signal down. On May 8th, we had told you to look for a signal up. On May 4th, we had told you to look for a signal down. On May 1st, we had told you to look for a signal up. On April 25th, and then last week, bazinga. Which way did it break out of the zone? Did it break out of the zone to the upside or the downside? To the upside. Always look on the bright side of life. To the upside. Boom. I believe it has more potential. I think it's going to tick out the high over here. No, where's the other high? This guy. I believe overnight into tomorrow, it's going to tick out this high. That is my estimate, and I'm putting that in the YouTube video. And then I think after tomorrow, we're going to go like this, down 100 points. Where's 100 points from here, roughly? That's 157, right there. Yep, so I think we're going to get up into the 250 range, and then we're going to fall back down into the 150 range. But that's me saying stupid things. If we look at other markets today, the NASDAQ, Billy, you asked about the NASDAQ. Can you see what would have happened if you followed the signals higher and higher and took the punctures? We can sort of track it, right? Let's do that real quick. We'll do the afternoon because it's the furthest from the forecast. There's a stop out right here, minus 16, crossover, exit, puncture, exit, signal with trend, exit, winner, signal with trend, winner. There's the next puncture, it gets up and then it falls back, winner. 322, signal with trend, almost hits the stop, exit. Puncture right here on the 341 candle, we exit by 345, winner. Signal with trend, look at that little double toppy thing there at 352. And then Billy, if you wanted to go the last few minutes before the close, you basically finish where you started, 415, sort of right there. That's a nice little run. This is an indicator available for NinjaTrader. You can sync this, I believe, you can sync this with your Interactive Brokers account and or your TD Ameritrade account. Yeah, well, there's a stop over at 2 o'clock. And then earlier in the day, Billy, that's the morning, right? Kind of the same thing. You'd have made a little bit of money on the NQ. This is my favorite market, by the way. Over on CL, Robert, I know you and your wife were watching this one. We'll just sort of look together real quick. This CL on a 3-minute chart. Did it go down at 8:30? Did it go up at 9:06? Did it go down at 9:36? Did it go up at 10:15? Did it go down at 11:24? Here, went all the way through that white dot. And then we get into lunchtime, down until here, up until here, down until here, up until here. This made me mad at 227, 230, because it was off by 1 bar from the reversal, which was kind of sneaky, so I can't count that one. And then up at 245. If we go down to the 1-minute chart, these are the 06 signals on the 1-minute chart for the 07 contract. Billy, just sort of ask again, are we in that 60 to 70% window? Yeah, we're looking at CL. What would happen, Billy, if you took shorts at all the selling pressure times today? You might have done okay, right? Because the game is rigged. The game is rigged. Some of you are European traders. This is the DAX today. Right, if you look at the signals on the DAX, your eyeball is kind of confirming what you're suspicious of, that, wow, when we get to these times, we sort of know what to do most of the time. And of course, there's some that don't work, right? It's not 100%. Gold on a 5-minute chart. Bzing! Billy, ready? When does Europe open? 4 or 5 o'clock? 5 o'clock, okay. So these times are Eastern time. We'll just do this one real quick. Short from 6:15 until 6:35 plus 12. Puncture plus 13, 730 to 825, plus 12. Then you have a puncture, which finishes at 635 plus $320. Then you're short, Billy, from 835 until 945 plus $900, and then short 1045 to 1140 just before lunch. If you wanted to finish by lunch, then you have a little dinker right here. You make $80, and then this guy is a loser. You're a loser. Nobody likes you. 235 until 245, another 16 ticks. Yeah. A lot of people use this in response to the question, what is the system most accurate with? And the problem is that it's not more or less accurate with something, but the right way to respond to that question, I've learned, is our customers are trading markets which are moving. So gold tends to move, oil tends to move, the NASDAQ tends to move. Yes, it can. Yes, it can. But you need this before you can do that. You need the first brick before you can put the second brick on top. There are some customers who are doing that, Billy. Yeah. Finishing up, the mini Dow was one of the times. And again, let your eye just sort of sort out, did the market do what we were expecting it to do at the times or around the times we were expecting it to do it? 60 to 70% of the time. I think so. I think so. Pound dollar on a 5-minute chart if you're a forex trader. The very first customers were forex traders. You get a sense of knowing what to do. And you can change different time frames. You can go from a 5 to a 15 and look at, analyze higher time frames. Some of you are looking at a daily, a 4-hour, a 15-minute, a 5-minute chart. But you kind of have a sense in the future. 15-minute NASDAQ, yeah, sure. NQ0623. James, can you see that? I'll take a screenshot so you can go back and parse it out later. I think we're meeting together on the 21st, 22nd. So James, here's the screenshot. Send to you. Go ahead and open that and bookmark it. Any questions as we start to kind of fill in towards the end here? If you're an options trader, you want to use this on Amazon, you want to use it on Netflix, GameStop, AMC, all the meme stocks. You can use it on Bank of America and all the different high volume trades that are taking place with your calls and your puts and your iron butterflies and condors and lions and tigers and bears. So we can punch in, you know, MSFT, any one of the stocks that you guys are following, and the software will come back and tell us. Caterpillar, yeah, sure, Caterpillar. You can do the same thing and get a sense of when the next signals are coming up, when to look for longs, when to look for shorts. Yeah, we have customers that just use it for stocks. And as customers use the software longer, they don't want to sit in front of the screen that often, and they trust it to work on the larger time frames. Most liquid stocks by volume. So today, that would have been Palantir Finance, Tesla, Grab Holdings. So PLTR is Palantir. Oh, let me come back. Pull this out. So What would you have done with Palantir? Number one, you would have gotten stopped out right here. You would have had a crossover. That was a pretty big gap, right? From here to here, so basically break even. And then Billy, you would have had a puncture above the blue line, and in Palantir, you would have had $1.34. So net gain on that. Tesla, we just saw. I don't know who Grab Holdings is. Let's take a look. They're number 3 by volume. There you go. So the number 3 most active stock today was GRAB. NVIDIA is right underneath it. We'll take a look at that one. But Billy, what was forecast for the 17th of GRAB? Right? They're not all winners, but when they are, wow, it's a pretty big drop. NVIDIA, boom. Oh, NVIDIA wanted you to take a puncture trade at 2 something 47 and then go long on April 10th. So if you were long in NVIDIA, 275 to 317. No, the software doesn't take anything into account but when the people who cheat are cheating. All the other stuff, in our opinion, it's my belief. Not a lot of people share that belief. All the other stuff is a smokescreen. Earnings, unemployment, housing starts, permits. These are things that the people in the big offices with the mahogany desks already know. They've known it months ahead of time. I believe sometimes they may even jury rig the reports. You can run this on an Office Chromebook if you wanted to. I recommend, and there's a minimum requirement, I recommend any computer bought in the last 5 years. It's going to work really well. Right now, I'm running a P7 at a 3.5 gigahertz with 16 gig of RAM. That's me. But I'm running it on a Chromebook, which is a P5 that's 1.5 gigahertz with 8 gig of RAM. Most of the calculations take place when you first load the indicator. And then, Bill, after that, you see how the forecasts are already here? Yeah. We've been around 15 years, man. You don't scare me. You don't scare me. So at the end of all this, the conclusion, I guess, that we come out with, you know, the book we all read and loved, we're looking for an edge. Oh, it does. Sorry, hang on. Right there. Billy, there's the circle. Yeah. No, you did great today. You had a lot of questions. It's hard to keep up with me. And you did wonderfully. Thank you. You made this a very entertaining webinar for me. We're looking for an edge, something that helps us win and win more than we lose when we win. Other systems, they use words like right or wrong, win or lose. This is just a statistically relevant edge based on what the people who move the market do over and over again lately. That's it. No, I meant that in a good way, Billy. I appreciate your questions today. Those help me. It makes the webinar go faster. So you kind of have to ask yourself, did it produce a statistically relevant edge today when we applied a basic trading system to it, right? And we asked, you know, did a basic set of rules provide an edge? Yes. Did we know in advance when to watch for the signal, making it psychologically less daunting? We're not wondering, is this the signal? Is this the signal? Is this the signal? God, I'm bored. I'll place a trade. Why did I place that trade? I'm such an idiot. Why do I call myself an idiot? I'm not supposed to do that. Stop filled. Now it's going in the direction I thought it was going to go. Enter. Stop filled. Why am I trading? There's no signal. Is this the signal? Is this the signal? It's a different proposition. I have 14 minutes till the next candle that I'm going to consider trading. I have an hour and a half until the next signal. I got in a trade. How long should I stay in the trade? When's the next time? It's peaceful. It's calmer. It's less of a battle, right? So yeah, I think it defines an edge. And ultimately, what do you think trading is? If you're using other indicators that plot in real time, they're telling you what just happened. If you're referencing anything but a leading indicator, you're trading based on what just happened. And that can be, in my opinion, misleading. It can be and is shown to be manipulated. If trading is about where price will be in the future, will prices be higher or lower 5 seconds, 5 minutes from now, 5 days from now, then it stands to reason, in my humble opinion, that we're probably one of the best ways to trade with, because it's based on a prediction. The prediction is based on a behavior pattern that's established. Right now, this is working most of the time. So why would you trade the other way? You can wake up tomorrow and be like, I have no idea when the signals are coming. I am going to be a nervous wreck and make all the mistakes I usually do. Or I have 11 times to trade today. If it breaks this line, I buy a breakout. If it closes above or below the moving average, I buy or sell. If it's in the direction of the trend, I'm going to get in and hold it for however long it tells me to. For many of you, that was the turning point where you went, oh, this is what I've been looking for. 5 years, 15 years, some of you 20 years before you found us. I want to thank you for hanging out with me again. I used to be nervous when I did these webinars. I thought, what if it doesn't work anymore? What if this is the week none of the signals line up? And I haven't had that experience in over 10 years, 15 almost. God, I'm old. Some of you are saying, I'm way older than you. And you are. You're way older than me. But we've been doing this for so long that I don't get scared on Thursdays. I don't review 2/3 of these markets. And I know no matter what you ask me, like Bill said, how did it do on the NASDAQ today? I'm pretty sure it did as well as every other market. Pretty confident. How do you get it? What's involved? Can you even have it? Yes, you can have this and trade with it tomorrow. You can wake up in the morning and say, hallelujah, sweet cinnamon buns. I can see the times. The light has been turned on in this dark room. I'm so happy and comfortable and at ease. I'm going to paste a link into your GoToWebinar chat box. Thank you, Dave. The program we were talking about, let's do the time warp. That's a song, I think, right now. At the very bottom of the page is a Willy Wonka golden ticket. It's not $2,495. Don't worry about it. Hang on. Yes, James, that's why I sing to you. Yes, Billy, trade with the trend whenever possible. If you trade counter trend, use a tiny stop, 1-to-1 risk reward, cinch it up. If you click that orange button, an annoying pop-up will appear. Michael, what is that pop-up? Some of you want a live trading room. You like to learn with somebody telling you step by step, get in here, get out here, here's where I'm getting in, here's where I'm getting out, here's my track record over the last 30, 60, 90 days. If you're that person, we created a channel for you to learn. You don't need this if you're doing something else. You're following a system that you like Robert and his wife, You don't need this room. It's just going to confuse you. None of the stuff matches what I'm doing. Don't get it. But if you're that kind of person, we have it. And it's discounted when you first get the software. I think you should try a month of it just to see if it jives. It does with a lot of people with what you're doing. If you're starting out and you're trying to make some money, you can maybe even shadow trade the signals at home in a simulator till you're comfortable. And that's $149 a month. It meets Tuesday, Wednesday, Thursday, 8 to 12 Eastern time. If you don't want it, don't get it. I don't care. You don't need it. There is a purchase agreement. There are some basic computer requirements. We sort of promise to make sure the code is bug-free and operational. So when Ninja, for example, upgrades their platform and puts in some new features, we go back and make sure everything's communicating well and okay. Please don't try to steal the code. Don't do it. Let's just be nice to each other and not do evil things. And if you treat us rudely, if I find out you're swearing at our customer service tech, calling her all sorts of not nice names, that will violate your purchase agreement with us. There is a place for a promo code that I'm going to tell you about, WARPOFF. I'm going to write it on the screen. Yes, it's the same one as last week. Yes, I know. No, I didn't change it. WARP in Cincinnati. WARPOFF. Not AARP. If you're that old, I'm not a commercial for the organization. It's WARPOFF. It's like, I won't go down that road. When you do that, it takes $500 off the price. So the marketing people say I'm supposed to create urgency by giving you a promo code. Don't you feel urgent right now? Not really. I don't feel any urgency, Michael. That's cool. Those of you with PayPal accounts, they do offer a 6-month payment plan if you want to get in there and take advantage of that. Most people just check out with a credit card, and that's cool too. This includes a lifetime license, 2 computers, lifetime updates on the Warp program. It includes free video training archive access. We have years of videos ranging from beginner and intro videos that are 10 and 15 minutes long, upwards of hour-long videos showing advanced techniques and strategies. We do offer tutoring and mentoring, private sessions, if that's something you're interested in the future. And we also have a burgeoning Skype community, people who are sharing their results with each other. And if you're not a member of that Skype group and you are a customer, people in here are sharing their results and their stats and their settings with each other, and so you can be a part of that community and learn from other users. We do not have a Discord. Don't ask. I don't have one. We pay a lot of money every year to participate in the Trustpilot program. We've had reviews as low as 1 and 3 stars. We have 1 3-star review, 1 1-star review. The overwhelming majority are 4 and 5 stars. These are customers who have actual receipts. They are not affiliated with me or my family or my company. And so these are real human beings who are in the webinar just like you. And they wanted you to know what their experiences were. They're not compensated in any way to write these things. And so I would encourage you on Trustpilot, just look up Back to the Future Trading, and you can hear what many of these people said in horrible grammar without any spell checker. A lot of you need to take a basic writing class, and that's okay. If you're net profitable, I don't care about your writing skills. So take a look at that and see if that's something you're interested in. Any questions as we wrap up here today on what is another successful demonstration of the power of predictive technology. Thanks, Billy. Once you get the software, you can download it and install it right away. We also have free installation for those of you that are nervous about doing it the right way the first time. So Rachel will log on to your computer via GoToMeeting and connect your account to your data source and get you rocking and rolling. Don't be intimidated if NinjaTrader is a new platform for you. They do start you out with a 2-week free live data. 2 weeks of live data for free with your demo account while you're getting your data connected for the other stuff. And that can be especially helpful when you're getting started. Yeah, Billy, we'll do all that for you and with you. So after 15 years, we are an ecosystem partner with NinjaTrader. We have, you know, the Skype connections with the people at tech support and over at the accounts. So anything you need assistance with, once you get the software, we'll sort of be your Sherpa on the Mount Everest of Ninja to make sure you're up and running and doing okay. Yeah, don't do it alone. You don't have to. You do not have to do it alone. All right. In conclusion, using anything but this is dumb. No, that's not that's not what I meant, but you understand. Going it alone, operating under the assumption that markets are fair and responding to reports, and nobody knows until the last second what it's going to be, except the 1% of people who rule the world. It's delusional, in my opinion, based off of how many people get caught every year manipulating a market. And the more technology they use, the more reliant they are on algorithms, I believe, the more prevalent and the more important these signals are. The more dependent they are on these things, the easier it is to catch them. Otherwise, there's no way we'd still be in business nearly 2 decades later. This should have stopped working a long time ago. And some of you have been with us for 13 years or more and tell me the same thing. Still working, still making money with it. So that's cool. Thank you for your time. Thank you for your focus. I hope and earnestly, I'm supposed to say, please buy this. You're supposed to ask for the order, the Dale Carnegie School of Sales, right? I'm supposed to offer a coupon code, check. I'm supposed to offer social proof, check. I'm supposed to offer evidence that the signals were working, and that was check and check. And I was supposed to ask for the order. Please buy the program, check. I think I covered all the bases here today. If you get a phone call or an email from a guy named Dave, he works with us. He's pretty cool. He onboards new customers and he helps them step by step through the process. You are not alone. You've got Dave, me, Ron, my partner, Rachel, the tech assistant, and hundreds of other customers on the Skype group to ask questions to and get guidance from. So don't do it alone. You don't have to be Tom Hanks on a Caribbean island or Pacific island or wherever he was when FedEx almost killed him. Come back out of the cave. We'll give you a hand. May the wind be at your back. May the golden warm sunshine rain down on your handsome, wrinkled, chubby faces, your stubbly little scowling trader faces. May the mountains of adversity and difficulty lay low before you. May the valleys of adversity and obstruction rise up to meet you, that your path might be level as you move forward towards your goals and dreams. It's been a privilege and an honor doing what we do to help you accomplish that. Thank you to those of you that have supported us. Continue supporting us. Please tell your friends, family members, people on trading groups about us. It helps. We don't market. And so everyone you tell, that's less money we have to spend finding people like Billy who need a hand finding Robert and people like them. So thank you for those referrals. It means the world to us. I love you all. Thank you for your time. Please check the YouTube video. This webinar will be loaded to our YouTube channel, Back to the Future Trading. We also have a Facebook group, Back to the Future Trading, you can follow along with. And any of the Facebook E-mini S&P pages, I'm on all of them, posting stuff all the time. If you want to join up as a customer, you can see what we're posting over in there as well. Take care, everyone. Have a great day. We'll see you same bat time, same bat channel next Thursday. Another successful week in the hopper. I appreciate all of you. Have a good one. Take care. Bye-bye.